here we go. It's over to Anne.
Okay, thank you very much. What an honour to be here, the person sort of is keeping you at the end of the day, and it's absolutely gorgeous outside, and I'm really honoured that you're in here listening to me rather than outside sunning yourself. But then I heard about the drinks afterwards, and that's the real reason that you're staying. Anyway, thank you very much for coming to listen to me talk about Starling Bank. And to make this as interesting as possible, I'd be giving a prize at the end of the talk for the most interesting question. That's actually posed during my speech, okay? So don't hang back until the end. If you've got a question that you want to ask, throw it out and I'll try and answer it. And there will be a prize of a bottle of champagne, not here today. You'll have to come and visit us to pick it up for the most pushy question, okay? We quite like pushy. Right, I'm Boden, CEO, founder of Starling Bank. After 35 years in traditional banking, I decided to quit my job to start a bank. And most people thought I was absolutely crazy. A lot of people think I'm still crazy. But my background was, I was a computer scientist that joined Lloyd's Bank in the early 80s. And I had a pretty traditional banking career in technology jobs, CIO, CTO jobs, operations, front office jobs, through a range of banks throughout the world. I worked for Lloyd's Bank, Standard Chartered Bank, ABN AMRO Bank in Amsterdam, Allied Irish Banks in Dublin, Aon Corporation Insurance Company in Chicago, RBS in the UK, UBS in Zurich. And I went through a pretty horrible financial crisis in 2008, 2009, where I was head of transaction banking for EMEA, Europe, Middle East, and Africa, for ABN AMRO and then RBS. And if you remember, RBS bought ABN AMRO. I think they paid 72 billion for it. My business was called the Jewel in the Crown. And then just about that point, the financial crisis started. And as I always say, it wasn't my fault. But after the financial crisis, I stepped away from my role in RBS, where I was looking after big corporations in 30, 40 countries, from anywhere from the UK right the way to Kazakhstan and whatever. And I heard about FinTech for the first time. And I came across people building systems and technology and businesses that actually made real difference to customers' lives for hundreds of thousands of pounds. And that was taking me 30, 40 million in the big banks. And I didn't quite believe what I was coming across. I became an advisor to go cardless. And I couldn't quite realize that these businesses were creating real value. And all of a sudden, I came to the conclusion that what would it take for the big banks to do the same? So in 2011, I spent most of my time going around the world learning about FinTech. And we didn't really call it FinTech. We called it, what these new payment institutions were doing. And at the end of that period, I decided to try out all these new skills in Allied Irish Banks, an entity in Ireland that had taken a 20 billion bailout from the governments, from the ECB, the IMF, post the crisis. I was going to take all those techniques that I'd learnt in FinTech and apply them in a bigger bank. And when I was at AIB, I went in as Chief Operating Officer. During my 18 months there, something like 1 in 4 people left the organization as a result of transformation. We were very, very successful. We returned the bank to profitability. We took lots of processes and reinvented them. We made them the best ever processes. But it wasn't enough. I'd convinced the organization to get out of the office and talk to real people. That was tough. I convinced the organization to use lots of the techniques I'd used in FinTech. But I still had hundreds of millions to go. I still need to make huge savings. So I started going around the world, talking to people in banks around the world about what they were doing. I went to Australian banks, I went to US banks. I spent my time going out there talking to real people, real customers, branch staff, CFO, the CTO, the people that ran digital. And every one of those organizations told me the same story. We got this plan to refurbish the branches. They're all going to have nice sofas and colored carpets. And we're going to take all the transactions out of the branches and put them on the mobile. And I go and see the head of digital, and he said his organization didn't understand him. And then we'd have a talk to the CTO, and the CTO would say, well, you know, the systems we have weren't built for this sort of way of interacting with customers. And everybody was telling me the same story. Everybody had a plan, but most of the people in the banks didn't believe the plan was going to work. And the only difference between the plans was the color of the carpet in the branches they were going to refurbish. So I came to a conclusion in January 2014 to quit my job as Chief Operating Officer of AIB and start a bank. And I knew very well people didn't start banks. And I wasn't a typical person to start a bank. But I started the journey. But this bank was going to be different. This bank was not going to buy packaged software and deliver it to customers using some sort of modification or some sort of known process. We were going to use all the technology that was used in other industries and bring it to banking for the first time. We weren't going to be a neobank. We weren't going to be a bank that basically perches on top of somebody else's banking license. We're going to have a direct banking license of our own. And above all, we're going to do things in a very different way, different business model. Banks typically have a business model which is you sell a current account to customers, a checking account. You charge all the cost of all the branches and all the money transmission to that particular product. And then all of a sudden you have a loss-making product, and therefore you then have to sell other products to make up the difference. And these other products were very difficult to sell. Customers didn't want them. Customers already discovered Google. And additionally, selling those other products occasionally got you into the situation of, well, cross-selling and upselling occasionally leads to mis-selling and regulatory fines. But this new model was going to be different. It was all about taking data from every single transaction that goes through the current account. With a direct MasterCard issuing license and direct access to the payment schemes, not going through somebody else, but directly accessing the payment schemes. So you're buying all the services at the lowest possible cost. You can actually create a huge amount of data around every single transaction. And that data you can use when you have enough of it to give customers insight. And instead of selling your own products to those customers, what if you enable those customers to access a marketplace of other people's products on other people's balance sheets, other companies' balance sheets? And what if you connect those products together using open APIs? And those open APIs were somehow being talked about as a possible way of implementing PSD2. So the model was that I went to the market in 2014, January 2014 was, I've got a great idea. I'm going to start a bank. It's going to buy services at the lowest possible cost. It's going to collect all this data around transactions. It's going to use machine learning and artificial intelligence to get insight. And it's going to suggest products on a marketplace to customers that they can engage with and buy those products they want in a very easy way. Because if you have all the information about a customer and you KYC'd the customer, you know who the customer is, you know your customer, you can actually help them buy the best mortgage. If you have a mortgage product in a marketplace, imagine the experience. You have a customer, you know from all his transactions where he's spending, she's spending all the money. You probably know what they're saving for because you have certain features of the apps where you could tell what they're saving for. You can suggest a mortgage. You can pass information to that mortgage provider so they can rely upon the fact that you've actually put that individual through a KYC process. You can also provide information to the underwriter, to the mortgage underwriter, about how that person spends their money. And then you can help that process happen in a very seamless way and integrate data back into the banking app so the customer can see this overall position. So what I was talking about in January 2014 was quite difficult for people to grasp. It's going to be a real bank, yeah, just like the big banks, connected to real systems. All new technology. Yep, we're going to go on the cloud. Yeah, but banks can't run in the cloud. Back in 2014, the regulations said the banks couldn't run on AWS. We're going to run in the cloud, we're going to build the technology, we're going to have direct access to all the systems, we're going to use all the data with machine learning and artificial intelligence to give insight, we're going to use APIs, and we're going to have a marketplace. People scratched their heads. People thought it was not possible. 4 years later, all these things are being talked about. And we now have a fintech world where people are talking about banking platforms, people are talking about marketplaces, people are talking about PSD2, open banking, connectivity, and using new technologies and new techniques to build banks. So 4 years later, where are we? Well, 4 years later, we have more than 100,000 customers, we have several thousand business customers, we have an app which is award-winning. We provide all these services to retail consumers, businesses, and because our APIs are so powerful, we're actually offering them to businesses, other fintechs, and governments. The Department of Work and Pension actually uses our API to connect into payment schemes. So that's what we're doing. We're successful. It's 4 years in. We've had a banking license, just over a year ago, after the big build. We're out there, sort of people know about us, our customers love us. But what's it like inside Starling? What do we do all day long? And I have visits from CEOs of big banks, on average every other week. And they come along to actually figure out what we do and how it's different to their own organizations. We're 170 people, and what's special about us is that we don't have an IT department. We're engineering-led. We have 50 engineers, and we have teams of people building features, sitting with groups of people who generate ideas and deliver together. Today is very, very unusual for Starling. It's Friday, and it's 10 to 5, and I'm not in the office. Because 4 o'clock on a Friday, every single Friday, we have demo time. And demo time is when we demonstrate to each other what we've built during the week. and we all demo. Because the only thing that matters to Starling is talking to customers and building software that works. We do no internal presentations. The only thing we do to show each other is 4 o'clock demo time on a Friday. So there's a certain culture about doing things fast. On a typical day, we'll do 3 to 4 implementations into production. We tend to do app and Android, iOS and Android releases every other week. But our back end is we normally do at least 3, if not 4 or 5 implementations a day. We move very, very fast. And we move very fast because we don't plan too far into the future. I spent 35 years learning how to do things properly. And most of that properly was just wrong. I've outsourced, I've offshored, I've cost managed, I've reorganized. And now I realized I spent most of my career building bureaucratic organizations that have failed to give customers what they wanted. And I'm very, very fortunate that I have now the chance to make something really different happen. Now, I haven't had any questions yet. Come on, you must have. Oh, question. Okay, good. You had to shout because you haven't got a mic. Okay.
Firstly, thank you. Fantastic talk. It's really inspirational. But you wanted a challenging question. And I do applaud your approach to agility and not waiting for regulation to catch up and allow you to do something. But everything you've talked about, to me, sounds like you've taken the rough edges out and smoothed the customer experience. You've talked about, you're still talking about giving customers access to product, albeit in a cheaper, more friction-free way. I'm sure you've got a roadmap, or you say you design quite short term, but where are we going to be in 10 years' time? It's still putting people in touch with the product. I mean, what is the role of the bank going to be?
Yeah. Okay. Very, very good question. And what sort of organisation do you work with?
I started a little agency in 2 weeks called Happen.
Okay, good. I don't know what the future holds. Okay? Now, if you imagine the situation of what could happen under open banking and PSD2, you have an app, and you have somewhere that holds the account. And you could have another entity that consolidates things. We could be going into a world where the app is by HSBC and the account is by Barclays. Mix and match banking, okay? And we could have a totally different entity consolidating all the different banks. Now, one way that this world could develop is that front-end app through an open API to a back end is no longer a bank. It could be Amazon. It could be Amazon that actually has a button where you press the button and it uses PISP functionality to initiate a faster payment to the Amazon account, meaning that they get the money immediately, saving them working capital, and also saving interchange. Great. All of a sudden, Barclays has lost its customer relationship. But what if the banking relationship became so subsumed into the background? What if banking became invisible? What if banking actually happened in everything we do? Right? What if, when I walked into this building, it immediately charged me for the insurance of being in central London? What if I walked into a shop and just walked out to something and I have to pay for it? What if I put the lights on in the house and I pay for it in the background? I think that we have developed apps for people to do things in them. And we built PFM tools to show how our money is doing and what we should feel. What if those two things went a little further? What if payments became something that we didn't actually notice were so micro. What if they happened all in the background? And what if the PFM tool on your app that says how you spent your money in what merchants became a feeling as you walked out the store? There was a feeling for spending too much money on handbags. So it is very different, and the world could be that different. Sorry.
Given that we don't really care about which energy supplier we get our electricity from, take aside
Yeah.
the green thing, etc. Given that we possibly don't care really whether we get our data and minutes from Vodafone or O2 or whatever, in a couple of years' time, are we going to give a crap about which bank does our transactions, or as you say, well, they're going to be so micro, it's just happening somehow? And what's the point of a bank if that's the point? That's what it is.
Yeah, okay. I think these are very interesting questions. I don't know which way it's going to work out, okay? And at the moment, I'm playing in every field. I'm doing the app, I'm doing the back end, I'm doing the aggregation, I'm giving the customer experience, because I don't know, and nobody does, how this is going to work out. But if we have a situation where banking does become a commodity, right, I think that is where scale matters. And we could end up with an infrastructure whereby certain people own the customer experience and 2 or 3 big engines run the banking infrastructure for payments. And then you have fungible capital coming in, providing lending. I think the question you were also asking me was, why become a bank? Why go through all the effort of starting a bank when I could have done something else? I think being a bank is the only way to make money. I believe that lots of the fintechs around that don't have banking licenses have no viable way of making money. What they're actually doing is raising customer experience, doing a great job for customers, pushing pricing down, but there's no money, because the revenue has to be shared with so many people in the value chain that they're never going to make money. What they're going to do is put pressure on everybody to up their game and compete. And I believe the big banks will copy everything we do. Big banks will copy everything. But what they can't copy is the cost base. Starling needs to be a bank, because that's how we're going to make money. And we're only going to make money if we scale. Little big banks don't work. You have to have scale, you have to have focus, and you have to realize the world's going to be a different place. I do not believe that many of the fintechs around at the moment have a viable revenue model. I think the big challenge is going to be whether the big banks can get small enough, quickly enough to be relevant in the future. Next question. Okay.
I'm Nick from Octopus Labs.
Yep.
I'm interested to get your thoughts on remote collaboration. You implied in your closing remarks that offshoring was the wrong kind of way to go in your career. If that's true, why so?
I think I've outsourced and offshored more than 35,000 people in my career. And during that period, it was felt that cost was the most important issue, and you're sitting on tens of thousands of people in technology functions, and that cost of technology was actually a problem for the organization. And something had to be done about it. Something had to be done about it to move it offshore, where higher qualified engineers could be sourced at lower cost. And the problem was that it actually broke the connection between the business and the delivery of technology. When I started my career in 1981 as a computer scientist in Lloyds Bank, I was very close to the business, sat almost next to them. I coded, was an FX trader, we did it together. Throughout 35 years, I've gone further and further apart. We lost trust in technology and we built in bureaucracy in between. And as you get more outsourcing and offshoring, you get more process. And in a typical bank, only 2% of the total costs in a technology department go to somebody who's actually coding something. And you put all that effort into making sure that 2% is really right. In modern day fintech, in modern day businesses, in modern day tech, what we actually do is to put 95% of our effort into coding because we can change it. And we get the best quality coders, the best quality engineers who actually are prepared to make decisions. So all my jobs in the past about making it a cost issue was wrong. We were very happy about having, sort of traders and deal makers in the same office as us in London, but technology was something to be done far away. That was wrong. Engineering is the most important thing in an organization, and it needs to be set front and center. Okay, good.
That's easier. Maybe you just answered the question, maybe this is too personal, but in your career, what would you say was the hardest thing that you had to admit you were wrong about, and what did you learn from it?
When I started Starling, I thought I needed at least 300 million, and I thought I was going to do it by bringing people together from big companies to make it happen. I also thought it was going to be very easy to raise money. I'd only ever dealt in hundreds of millions, and I'd raised billions to buy companies. Going out there and raising money for a startup that's bold, that does things differently, and you need that sort of money was never going to happen. So I think a lot of the reference points I built up in my old career were wrong. And it's a hell of a shock when all of a sudden that all peels away.
I don't know if I need this. Can you hear me? No, okay. So this is slightly different question, but comes from the fact that I'm a woman, and I'm a product manager, and I work in fintech. I actually always worked in financial services most of my time. So it's really inspiring to be having a founder that is a female, especially with your experience, personal and also professional. So why do you think we have so little women in tech, fintech, and what's your learnings and experience and what you can say to us that are younger generations?
Okay. I've been in this industry a long time. And I started in 1981 as a computer scientist and a chemistry degree. It has not got better, it's got worse. Okay. Throughout my career, I was hoping we'd have more women, and it's become less and less. There's hardly any women in tech, there's hardly any women in finance, there are hardly any women entrepreneurs, and put all three together, I'm pretty lonely. Okay, but I think the reason that we don't have so many women in these areas, it is very, very difficult to be the only woman. And being the only woman engineer in a team, or being two women out of 10 or 20 or 30, is very, very tough. And we have very successful engineers at Starling, and we have and our most senior product managers are women. But it's really tough. It being unusual and being in the situation where people remember you more, right? If if all the men in the audience, okay, right? If you go to a meeting and you typically overestimate the contribution of women, right? And you underestimate the value of that contribution. And therefore, as a woman, you're constantly having to reach a higher bar. You have to be twice as good, work twice as long to get there in twice the time. And I know that's controversial and people may not like it, but that is the reason why we do not have more women in senior positions and tech positions in the industry. But you can all help in some way. All these things are outputs. We are in the situation we have at the moment. They're outputs of certain things that have happened in history and in our childhood. One of the things we feel passionate about at Starling is making money equal. So go into Twitter, #MakeMoneyEqual. We believe that one of the reasons why we're in this very unequal society is that men and women are talked about in the press differently. If you talk to women about money in women's magazines, it's all about splurging, buying shoes, sort of saving and looking after the little money. When you talk to men, it's all about cryptocurrencies, investing, and power salaries. Okay? That's just one of the things that lead to this very unequal position we are in. Anyway, that's my position on women in the workforce. Make money equal, #, please.
Hi, Anne. Question about design and the role of design at Starling. So I'm a Starling customer, and for me, I think, onboarding and the way the app is designed, when you receive your card, everything is well designed, and I think is very customer-centric as well. But you can keep mentioning about it's a engineering-led business all the time. What is the role of design? Is everyone a designer, or how does it work?
We're very, very critical of ourselves all the time in Starling, okay? We have a number of designers who have been with us since the very beginning. I will spend at least 10 hours a week talking to designers or in design sessions. I've read every single product and design book I can get my hands on. I still don't think I'm very good. And therefore, as much time as I can spend with people who are good really enhances my view of where the organization should go. How we actually work is that we have our designers and product managers sitting in teams with engineers. I think we have a long way to go in all the disciplines. And I'm really, really keen to have feedback. So anybody in the room can give me any feedback on anything at all. I'm really grateful. My email address is Anne, A-N-N-E, @starlingbank.com. And we take this very seriously. So if any of you professionals in the audience want to tell me what's wrong with what we're doing, it's lovely to hear all the things that we're doing right. It's also great to know what we can do better. I really appreciate it.
How big is your design team?
I don't actually have a design team, like not having a technology team or a finance team. We have about 6 people who could call, if you went onto LinkedIn, they'd have something design in their title. What we don't do is, and this is one of my sort of real passions, I think it's really dangerous to tell people they're in a department or they have a group. Because I think that most people in Starling can give a lot of input to lots of things. And throughout my career, I've always been doing a bit of my own job, but mostly somebody else's. And I think that's good. And so we'll have designers who participate in finance meetings. We'll have designers who will be really into just pure design, but then on the other hand, are doing a bit of product management. What we don't want to do is tell somebody they're a designer, you just do design. Nobody'd ever tell me you're a CEO, stick it, sort of just do CEO things. So we try very, very hard not to have those departments and to make sure that design or engineering or product management or finance is involved in most things we do. Yes, we do have people in the office who will wander past and they're designing stuff. But they are very influential. We have a very flat structure. And a designer will decide and make a case for going into a new business area, just as likely as a designer do it as an engineer would do it.
Hi. How does Starling grow from 100,000 to 1 million users, or whatever number you want to?
Middle of next year if we go at the rate we are at the moment. Okay.
Just organic growth.
Yeah. So there's when I started Starling, I sort of did I thought cost of acquisition could only be modelled on what I was used to. And I didn't realize the whole world was going to change, and customer acquisition in our sector was going to be something that just takes off. We don't publish our numbers, so we don't say, we don't want to be in a race, because I don't think it's a race. So we don't publish our numbers, but things are going very fast. And at the moment, we do advertise on, on Google and whatever, and all the various Facebook mechanisms, but we have an awful lot of PR as well. We were this week. I think this week we are, we're in the App Store as a feature. We tend to get featured in a lot of blogs and things. We have an opinion on lots of things, so we get talked about. So our cost of acquisition is relatively low. And if that continues the way we expect it to continue, we will have millions of customers very soon. The question is how far we can go before we become more mainstream. And I think that's the question.
As one sort of first to market, you've had many brands over the years. You've had Just Eat, Hungry House, one bought the other. You and Monzo are used commonly together as examples of disruptors. Would you sell? They buy you? Would you sell to someone else? What's your long-term plan?
Sell to, what do you mean sell to someone else?
Would you sell the business to Monzo? Or would you take it, or would you do vice versa? Or would you, someone comes along?
Monzo was founded from Starling, as you know. I don't think that one's going to work. I don't think. I think it's far more likely that a big bank will come along and buy one. I think that as far as I know, we're not for sale and Monzo's not for sale at present. I think you're going to have one or two, new fintechs becoming mainstream. You're going to have a couple bought out by the big banks, and you're going to have a certain amount of consolidation in the big banks. Nobody knows what's going to happen in a couple of years' time. I think that we're just about to. We've all been testing each other in this market to date. You know, I look back on 4 years ago, and you know, when I started this, nothing was happening, right? All this has happened in 4 years. I think that you'll have a shakeout in some of these business models. You'll have all the big banks trying to create digital banks. Some of those will succeed, some of them won't succeed. You'll have real pressure on pricing that will bring prices down for consumers. And I think the big argument is going to be, can some of these people survive in that environment? So I think it's a battle of the cost base rather than battle of innovation, if that makes sense.
Yeah.
Yeah, okay.
I have a question for you.
Yeah, okay, good.
So I've seen that you've launched business banking recently.
Yeah.
Could you tell us a bit more about that and what challenges you've had? As a business person myself, I'm quite intrigued at Starling's business account and how it's going to compare to, say, Barclays that I use at the moment.
Yeah. First of all, there's a huge gap between the banking products out there from the big banks and what's available, you know, from people like ourselves on the retail side. So how it works with a Starling account is exactly the same as applying for a retail proposition. You download the app. If you haven't got a Starling account already, you download the app, you do a selfie, you take a photocopy of your passport, and you select, we then look that name up at Company's House. At Company's House, then you pick the company you have, it downloads that information, and you have a bank account. If you're already a Starling customer, you just select, I want a business account, and we already know who you are. Okay, so we go off and look for your accounts at Company's House, you select your account, and you have an account. At the moment, we're only doing it for businesses that have a single significant person. We are soon to launch sole trader accounts, multi-director accounts. But what we've built all the functionality so individuals can have access to multiple accounts, and you can have access to that account by your accountant, and we have the functionality in place so you can allow certain of your accounts to be accessed by certain people for certain things. So we've built a whole set of permissions and a sort of a multi sort of configuration, so we can actually scale up to some of the biggest businesses. But at the moment, only on a smartphone, but our next iterations will be on other platforms as well.
Fantastic. Yeah, there is a massive need for this. I hate business banking at the moment, so please develop something good. Okay, next question.
How, if at all, does Starling currently make money?
It doesn't make money. We have quite a lot of expenses which offset them, but how we are currently making money on a small scale. We make money on net interest income. So basically we pay out in balances up to £2,000, 0.5%, and above 0.5%, above £2,000, 25 basis points. And we lend out in overdrafts, okay, at 15%. So the difference is to cover our provisions for losses and our profit. We also make some money on interchange, which is MasterCard interchange. Additionally, we have revenue from our marketplace. If a customer buys insurance through us, we get an introduction fee from that insurance company. Additionally, we have Starling Payment Services where we provide payment services to other companies, and we can make up to about 10 pence a payment on that.
Hi. Yeah, so Revolut, Monzo, Starling, all looking at marketplace right now. You mentioned aggregation in there. That's obviously a subset of wanting to do a marketplace. So aggregation theory talks about winner takes all. So who is the winner and why is it Starling? Okay,
aggregation and marketplace. With open APIs is basically allowing third parties access to the customer's data if permission to do so. Marketplace is consuming APIs in both directions. You can only provide a marketplace for financial services products if you have regulatory permissions. Starling has regulatory permissions for a whole host of things, including credit broking, mortgage broking, insurance broking, wealth management, whatever. Monzo doesn't have those permissions, and I think last week turned its marketplace off while they reconsider it. Revolut is not regulated. What it actually does, it acts as a appointed representative of an insurance company. So the regulation is coming in. So marketplace is great. You can do all the marketplace you want, but unless you have regulatory permissions from the FCA, you can't make any money out of it. As far as aggregation tools are concerned, yeah, we can aggregate. We have permission to aggregate across bank accounts. At the moment, people aggregate us, and we have a lot of tools that aggregate Starling data. I haven't really seen a huge shift in the recent months from people wanting to do it more or less as a result of PSD2. I'm not quite sure if I answered your question on aggregation.
It's more about the aggregation view of only both supply and demand. The marketplace allows you to supply as well as demand as customers.
Yeah, so marketplaces, majority of people use our marketplace because they want access to our customer base. Because if you're in our marketplace and you're a wealth manager, if you try to acquire customers through a comparison site or by marketing yourself, you've got hundreds of pounds of acquisition cost. If it acquires through Starling, because our acquisition cost is very low, what you pay Starling is a lot less. So people are using us to acquire customers. And if they come along with lots and lots of customers of their own, great. But that's the primary reason for now.
So we're going to have to wrap up now because of it's time to drink. But Anne, do you have anything else you want to say before we wrap up?
Okay. Well, thank you very much for listening. I'm honoured that it's got 5:20 on a Friday evening, a lovely evening, and you're listening to me. Thank you very much. If anybody wants to come and visit us, let us know. And we have regular, events in the office where people can drop in and meet a few people. We love talking to people who are interested in the industry. My email is anne@starlingbank.com. Just drop me a line. Thank you very much.
Thanks, Anne. Okay.